the Griswold Center for Economic Policy Studies. We are so pleased to have you guys back in person for reunion. We did reunion events virtually for the last 2 years, but I will tell you, being confronted by the orange and black in person is something that doesn't quite replicate on Zoom, so it's great to be surrounded by tiger stripes. A few short words about the Griswold Center. We were founded in 1989 by Alan Blinder, and our goal is to support policy-related research in the economics department, in particular by communications between academia, folks in government, and those in the private sector. We'd like to thank the Griswold team for generous support, along with our individual and corporate donors who make all of our programming possible. Today, we are honored to have Dan Morehead and Carolyn Wilkins to talk about the future of digital currency and the blockchain. As I'm sure many of you know, it's been a roller coaster few weeks for the digital space, so along with the markets more generally, so we're really happy to have them here to help shed light on a very tumultuous moment. Dan is CEO and co-chief investment officer at Pantera Capital, which he founded in 2003. He previously was head of macro trading and CFO at Tiger Management, and he started his career at Goldman. Perhaps most important today, Dan is a member of the Princeton class of 1987. With a BS in civil engineering. Carolyn Wilkins, after spending 12 years in the Bank of Canada, joined the Griswold Center as our resident senior research scholar. She joined this spring and already hit the ground running, doing events for us on crypto, and she'll be here all of the coming academic year. And she's currently an external member of the Bank of England. Caroline, not a Princeton graduate, but we still are very happy to have her. I'm also not a Princeton graduate, so there's a few interlopers among us. Graduated with a BA in economics from Wilfrid Laurier University of Canada, and an MA in economics from the University of Western Ontario. So I'm going to hand it off to these guys. There'll be about 15 minutes of presentation from each, and then we're going to open it up to all of you for Q&A.
Thank you so much.
Thank you. Thank you, and thank you all for coming. I think I got like a D in this room, so I'm psyched that I'm back after all these years. So cryptocurrency is something that I think is incredibly important, and it's going to change the lives of billions of people. But anything that disruptive has detractors, and it goes in hype cycles, and has these really big ups, these really big downs. And so I wanted to share some perspectives on what it is and why I think it's important. And then, obviously, I'd love to hear, where you all want to take questions. So the first thing is, a way I like to think about it is, the internet is a bunch of protocols that basically changed everything else in our lives, except they didn't touch finance, they didn't touch credit cards, remittance. So there's a lot of businesses that were untouched by the internet. And that's what Bitcoin is and all the other blockchain protocols. They're a way to move money around the internet. And even in the 90s, Milton Friedman said the only thing missing from the internet was an e-cash system. That's basically what blockchain is. The internet changed everything about how we do information infrastructure. And I think that blockchain is going to change everything about finance first, but then it goes into voting rights and all kinds of things. And the really cool thing about blockchain is the only thing you need to interoperate in the blockchain ecosystem is a smartphone. There's 4 billion people on Earth that have a smartphone. So it's going to allow billions of people to get into the world economy, to save in a more stable currency than their national currency, to transfer money across borders. So you read bad news about blockchain because that sells newspapers. Good news doesn't sell very well. And so an example of how blockchain is actually being used is the average remittance fee, the average transferring of money, thank you, across borders costs 8%. And for us in finance, 800 basis points is just a number. For the migrant, it's a month's wages. They spend an entire month working to pay their remittance company, and their family only gets 11 months. So with Bitcoin or other blockchains, you can transfer money to anyone on Earth with a smartphone, essentially free. So another analog, a way to think about it is, when I was a kid here, AT&T controlled every phone in this country, and if I wanted to call somebody in England, British Telecom controlled all those phones. It was mega expensive. Then we realized you could route around these monopolists using the internet. So doing voice over IP dropped the cost of calling to zero. Now we stream Netflix on our iPhones. So basically, that's what Bitcoin and other blockchains are, money over IP. It's going to route around the credit card companies, the correspondent banks, all these very, very expensive oligopolists that control payment rails. So a huge distinction between blockchain and the rest of the internet. The rest of the internet, there really isn't any value in the protocol itself. All the values in these applications that get built on top of it. The most extreme case is Tim Berners-Lee invented the web and got zero. And then Mark Zuckerberg might not have even invented Facebook and is sucking $40 billion a year out of 2.5 billion people. In the blockchain ecosystem, it's the protocols themselves and the early developers, early contributors that get the value. The important thing is, everyone talks about Bitcoin because it was the first one that worked. There were decades of attempts to make blockchains work. Bitcoin's the first one that worked. There's now hundreds of very important blockchains. Bitcoin is really good at storing money and moving money across borders. In 2015, a project called Ethereum was created that allows you to program money to say, if this happens, pay that guy. If it doesn't, pay that girl. And then now there's a profusion of really interesting blockchains. And so the important point to stress is it's not just Bitcoin. There are tens of very important blockchains themselves, and then thousands of really cool projects built on top of one of the other blockchains like Ethereum or Polkadot. So a current topic is decentralized finance, DeFi. And it really is a good example of how the blockchain is promising to take these oligopolists out of the middle of transactions. And so we're all used to banks sitting in the middle of borrowers and lenders and taking a big spread, and then every 20 years blowing up and the taxpayer has to bail them out. So DeFi is the opposite. It's people that want to loan money, borrowing straight from people that need to borrow money, and the rate's much better for both sides. So there's already about 200 billion of money in decentralized finance. Another example is exchanges. We're all used to big, ionic column buildings like the New York Stock Exchange. They as well take a big spread out of all those transactions. With DeFi, you can have people who want to sell an asset connected to people who want to buy an asset by computer code, and code doesn't eat much, so it's much cheaper. So DeFi is kind of the current thing that's taking off. The next thing is called Web 3. I guess there's two other versions of the web, like the desktop web and then the mobile web. So Web 3 is basically replacing all of the companies that we're used to now that provide some cool service like music sharing or photo sharing or whatever with a DeFi version of that. And so I think all of the businesses we're used to now in about 10 years probably will have a DeFi version. And music sharing is a good example. Spotify, it's a great system, but it's very expensive, and then the artist doesn't get very much. Spotify keeps most of the money. In DeFi, you're connecting the artist directly with the consumer of music. Both get a better experience. And the really cool thing in Web3 is participants can own a chunk of the value. So Facebook's business model is pretty well. 2 billion people get up every day and spend 50 minutes creating content for Facebook and giving it to them for free. They don't get anything back. And they actually have to pay $20 for the data plan to upload all the data. In the DeFi Web3 world is if you upvote songs to become popular, you start earning a little bit of money. And so everything you do that contributes to the value of a social network can be given back to the participants. And the thing that's kind of taking off in a lot of press right now is NFTs. So they're basically like electronic art. And with every disruption, there's some things that are going to go to zero and that are worthless, but then there's going to be some really important things that come out of it. And that's the main point I want to share, is that although there are some things that are probably pretty stupid that people are buying, there is important art being created. And it's art that evolves and changes over time, which is really cool. Two-dimensional art or three-dimensional art that we're used to, paintings and sculptures, they stay the same for centuries. Here you can have art that evolves with the fans' interaction with it, or AI can be changing it. So there's a lot of cool things that can happen with NFTs. And the last kind of big thing is gaming and the metaverse, the kind of virtual reality place. When I was a kid, Pong was the best thing out there, so I didn't really catch the gaming bug, but billions of people love gaming. It's huge for a lot of people. And blockchain allows people to interoperate between games, to move assets and levels from one game to another, and it's really starting to catch on. And the concept of the metaverse of kind of living a virtual world is so popular that Facebook changed the name of their whole company to it. And so again, there's a lot of good stuff that can come out of there. And the last couple of things, or just kind of why it's interesting to investors or people that trade, is it's still really, really small relative to all the things it's disrupting. And so that's why a lot of people are interested in it as kind of an alternative asset class or an alternative place to invest. And the last thought is, I think the Fed has created an enormous bubble in bonds that's created an enormous amount of inflation. And so blockchain could be the asset that's safe from all of the kind of repercussions of what's coming as this bond bubble is popped. And here's a graph of the price of paper money priced in like bushels of corn, barrels of oil, gold. And so with the Fed printing $9 trillion over the last couple of years, it's essentially crunched the value of paper money. And so even in the United States, people are used to a pretty stable currency are now flocking to cryptocurrencies because they will typically be more stable. They do have a lot of ups and downs, and we could talk about that. But over the last 11 years, they have gone up 2.5x on average over that period of time. So I think the emerging world totally gets cryptocurrency, and I even think the developed world, after the Fed, will start getting into it. Thanks.
All right. Well, I guess I need the clicker too, which is, did I bury it? Oh, there it is. Okay. Okay, great. Here we are talking about the greatest technology that we've seen in a while, and we're doing this. There's something interesting about that. I'm just really happy to see all these orange jackets in person, not in an online, but I've heard about it. It's in stories, even in Canada. So Dan did such a great job of outlining this. And so what I thought I'd do is put a little bit of structure around it. And I think it's important because, I don't know about you, but my very first job was pumping gas in Selwyn, Ontario, where everybody paid cash and there wasn't even debit cards at the time. And so this new world is not just exciting, it can be pretty confusing. And so I'm going to start off with what I think is really helpful in terms of sorting out what this crypto ecosystem actually looks like. I mean, Dan talked about different things like NFTs and DeFi and the metaverse, and so this helps sort it out. If you look at the very top line that says crypto assets, you can see that this is right now about $1.3 trillion market, which is about a little bit less than half than it was last fall, but still really big, is a set of very heterogeneous assets. There are different kinds of coins. It's not all about Bitcoin, but some are most of the market are unbacked, like Ether and Bitcoin. Another part of the market is actually called stable coins, and they're backed by either assets or algorithms that help support the claim that they will maintain some sort of peg or some floating value with respect to another asset, usually fiat. These crypto assets in and of themselves could just be an investment class, but they also help provide a foundation for an evolving ecosystem of crypto activities that are either centralized or decentralized, that's DeFi, that cover the kinds of financial services that we know and love. We've got lending, we've got payments, we've got investment vehicles, we even have insurance. And to support all that, on the right-hand side are a set of infrastructure, whether it's exchanges or mining platforms or whatever, that actually help make this stuff work. And why it's important is that when you think about it from where are the opportunities for investors, where are the opportunities for the economy, for citizens, and where are the risks as far as regulators are concerned, you need to set it out with a bit of structure. So I think what's really, really interesting about this ecosystem, if we first concentrate on that top bar, the crypto assets themselves, is that it's not surprising that we hear about Bitcoin and Ether a lot. This is just basically the whole square adds up to 100, and the different boxes are basically the share market capitalization of different crypto assets. And you can see with the light blue that in the top right-hand corner, the Bitcoin right now has the lion's share as Ether, but there are just a whole other pile of crypto assets. In fact, there are over 1,700, and they come and go, a lot of them. If you look at the exits and entries, it's quite an active chart. The interesting thing in the news over the last week has to do with stable coins, which are kind of the boring brown boxes in the bottom left-hand corner. And I'll talk about those in a minute, but you can see from there that they're not insignificant. In fact, this is a snapshot, but they're growing in time in terms of importance in this universe. If we start with unbacked crypto assets like Bitcoin and Ether, Dan talked a lot about the promise, and certainly I think this whole ecosystem has a lot of promise. If you drill down, though, into unbacked crypto assets, which are about 90% of the market cap right now, you have to know what the risks are and what kind of object you're dealing with. There's no intrinsic value. Well, fiat doesn't either, but at least fiat's backed by a taxpayer and a government. The price is highly volatile. We'll know that. I'll show a better chart of that. And so typically, instead of looking at it as a payment service, at least right now, it's really these are really speculative assets. So if you're interested in a potential for a high return, but also potential for a high loss, that's something to think about. What's interesting on the chart on the right-hand side is a very short time period, as you can tell. You don't see the big upswing in Bitcoin from its start, but you can see I think Bitcoin's the red line, that it peaked in value at something north of around north of $60,000 US in the fall, and it started to decline in value even before the Russian invasion. I think what we read in the news is, it wasn't doing very well afterwards. But you can see the vertical black line is when the Russian invasion of Ukraine started. In fact, Bitcoin's just sort of been up and down. It took its major bath was actually before that. I made the claim about volatility, so I should probably back it up. The chart on the left-hand side is just daily volatility of Bitcoin against the US dollar, and the orange line, which you could probably barely see, is the daily volatility of the Canada-US dollar exchange rate. So you can see if you're trying to use this in your business, as to be distinguished from an investment, it's a pretty hard slog right now. Relative to other assets, not currencies, you can see on the right-hand side, it's another kind of measure of volatility. You can see that both Ether and Bitcoin are much more volatile than those sort of relatively flat lines at the bottom, which are gold, the S&P 500, and then the VIX. And so volatility is a real issue. This is maybe where people who are informed and smart can actually differ in opinion. We can argue whether or not Bitcoin might eventually be a good inflation hedge. I don't think it will, for reasons we can discuss later, but it doesn't behave like one. And one way to look at it is to see the correlations between Bitcoin and the S&P 500, which has been going up. That's the red line. And then the correlation with gold, which is typically viewed as an inflation hedge, which is going down and in fact turned negative. So one of the more recent inventions is kind of think, okay, well, volatility is a real issue. Because if you actually want to provide financial services that will service the real economy, so people actually making investments that you can drop on your foot, like buildings and machines, well, you're going to need some stability. And so there are different kinds of stable coins, different kinds of backing arrangements, but I think that these have quite a bit of potential because because of that stability. Now, of course, the potential is only, and that stability is only as good as the backing arrangement itself. And so some are backed by real world assets, so Tether or US dollar coin. They're not particularly transparent about those assets. Tether got fined by the CFTC because of that last year. But nonetheless, that kind of business model could make sense. And in fact, it's one that Facebook or Meta's Diem tried to push forward. The algorithmic-based stablecoin, so those who don't have backing assets, but they just say, okay, well, we've got an algorithm that allows arbitrage opportunities to kind of create activity that puts its value back to what the peg is. They're more problematic and subject to death spirals, and that's what we saw last week with a Terra US dollar-based coin and its sister Luna, where as soon as people stopped believing in it, it just stopped working. And there's a whole history of nation states having trouble with maintaining a peg. And clearly, the backing arrangements are always key to that. Now, financial regulation, there's a long list of things that need to happen here that you can read, whether they range from regulation that helps AML or CFT, consumer protection, really important things like that need to happen in this space. It's very slow in coming, and I think we should talk about why that is. But there are initiatives underway that anybody who's active in this space should be really motivated to contribute to. And so there's stuff that's going on in the UK that I'm involved with, but the president just came out with an executive order with respect to digital finance at large, including crypto. And the EU just proposed a model for regulating this space as well. So it's coming. I think there's some really good business cases here, and Dan was absolutely right when he talked about how expensive cross-border payments are, and especially for those who are making remittances, who are often in the lower part of the income distribution. But it's also important for corporations. Corporations do about every year about 25% of global GDP in cross-border payments. That's a lot, and that expense plus a tied up liquidity because settlement times are so long mean that there's a huge amount of efficiencies to be gained to be cutting out the middle person. And I don't need to explain this chart, you just need this flow chart. The person sending the money's on the left and the person getting the money is on the right, and it goes through all these, goes through your bank, the correspondent bank, the other person's correspondent bank, and then their bank, and then there's the financial market infrastructure that's in between. And all those costs add up. It's, there's market power there as well, but even without the market power, it's pretty darn inefficient. And I think the gains to welfare could be quite large by fixing that. DeFi at large, so here now we're talking about the services that are provided in a different way. So instead of going through your bank, you get a loan through a decentralized platform. It's a really compelling idea and business model for a number of reasons. Dan talked about inclusion, and I think that's a possibility. But it also reduces the reliance on infrastructure in the financial system, the traditional financial system that's inefficient. It's actually, from a cybersecurity point of view, not secure, and on top of that, it's really hard to audit. And so, for those really kind of more boring, mundane reasons, it has a lot of promise. Now, for it to deliver on that promise, we have to make sure the risks are mitigated. So I'm back to the regulation part, where we need to think about the risk of fraud and misappropriation. We read in the newspaper all the time about fraud that happens there. Certainly does in the traditional financial system as well, but here it seems to be a little bit easier because the forensics and the policing and the regulation hasn't caught up. And as much as people say that this governance is distributed, so it's kind of more democratic, I don't actually buy all of that right now, because without getting too technical, there are concentrations in ownership of the coins that give you voting rights. There's concentrations in mining. There's an ability and concentrations in ownership to manipulate markets, as well as a need to have centralized parties to get back to the real world. So off-chain things have to be validated by an oracle, which is a centralized entity. So this governance thing isn't a hard stop for me. It's just something that we need to stop pretending isn't a problem and face it. So obviously, as still a central banker, it's like the mafia, they never let you out. So when I left, we worry about financial stability. And I won't go through this in detail, but these are the areas through which it's not just risk to the person who's taking it, it's risk that could transmit to the entire system that you have to pay for even if you didn't take the risk. And it can travel through all these channels. I can say right now that it's not big enough. You saw that little dot. It's not big enough or integrated enough to cause major concerns. The fact that we had a major meltdown last week and there didn't seem to be contagion in a big way is a sign that assessment's probably right, but it's growing. Just a last note before I conclude is just, we're talking about payments and in monetary regimes in the crypto space and thinking that that's where everything's going to migrate. And in my view, I think there's going to be some hopefully happy marriage between the two and an integration that really serves people and businesses. And part of that migration towards a more efficient and fair system could be supported by a central bank digital currency, which is just basically a digital form of money that's available to citizens. And for many of the reasons here, as opposed to thinking of it as a competitor to stable coins or to bank deposits, it could actually be an enabler for really interesting, commercially viable layers on top of the currency. And it could also do something really important, which is keep people having their access to a central bank non-profit making organization or private profit making organizations means of payment. You think just in Philly, people were commercial, like the corner store would started to stop taking cash. And the city decided to mandate that the use of cash was necessary, and partly because there's a lot of unbanked people. And so if you think about a cashless world, which seems remote, but I think we're going to get there, if you want people to have access to cash, which now is actually useless if you want to buy something online, you need to have this. So can't take a decision right now because there's a lot of hard things to get through. I've written some of them there. I think security and integrity are top of my list. Privacy is another one. We see in China with their central bank digital currency kind of some doubts about whether or not privacy is really being served there. And so some big decisions to take. That central bank digital currency question was part of President Biden's executive order on digital finance. So my concluding points are really in line, I think, with Dan's in the sense that I think that the crypto assets are the bedrock of an emerging financial system. That system goes well beyond the likes of Bitcoin to a set of financial services that are more efficient and safer and hopefully more inclusive. And that if authorities want to make the most of this, then we need to get on it in terms of regulation.
Great job.
I'm going to ask you the first question.
Sure.
All right.
So we have the pleasure of asking each other a couple of questions first before turning to you. So I was really interested in having your take on the...
Microphone.
Is it working? Oh, gosh, you really do have to be close. Okay. Okay, so the question is about Terra Luna, because you're closer to that whole space than I am, and maybe many of us in this room, but it's kind of a reminder that there are risks that naturally come with innovation, as you said, but it does raise the question of which kinds of stable coins really have a future. And so I guess my question to you is, where do you see the future for algorithmic kind of stable coins vis-a-vis those that are backed by real assets like US dollar coin?
Yeah, it's a great question, and our business is in the front of the newspaper a lot, often for good reasons, sometimes for bad. And last week, one of the stable coins in the space, Terra Luna, kind of had a run on the bank, old school run on the bank, and it was originally over collateralized, but the run was so big, everyone kind of lost confidence and it failed. And so all of the detractors against blockchain were out in force. And I was just speaking at a conference with Nouriel Roubini, who's basically made an entire career selling doom. And he has predicted 100 of the last 1 crashes that have happened. And he is always negative about Bitcoin. He's been negative, for like 40,000% return. Yeah. And he was in his prime. It was like great, as a total debacle. He got to do that. So the punchline would be that any kind of creative disruption like this, there's going to be experiments, and some things are going to work, some things are not going to work. And to my mind, it's very much like the internet. A lot of .com strategies were tried. Some things worked, some things didn't. But Pets.com's failure didn't mean the internet was stupid. It just meant one business model wouldn't work. And here's a great trivia question. Does anybody remember who the majority owner of Pets.com was? This dope that invested in pet food on the internet? I'll give you a little hint. He was an alumnus of Princeton. So there was this guy that thought the internet was going to be really transformative, and he tried a couple different business models. I guess canned dog food was not a good one. Books was fine, and so Jeff Bezos is doing great, even though he was the owner of Pets.com. And that's what you should think about these things. Terra Luna blew up. That's, it's too bad, but it doesn't say anything about the greater promise of blockchain, and there are hundreds and hundreds of other really important projects that are working.
Yeah, actually, I think that blockchain and Bitcoin was like a real service to humanity in the sense that it got us started on thinking about it. I don't think that's where we're going to end at all. So I'm not a big fan of that as an investment, but at the same time, when I think of blockchain and its applications to other industries, even in finance, like healthcare or helping us with know your customer kind of things. There's a lot of positive use cases that are both in finance and outside of finance where it could be really transformative. So I agree with you on that. I guess the question on the algorithm is whether or not that can ever take the place of fundamental assets. But because I guess if you could get an algorithm that worked to stabilize value, then central bankers could go to the beach, which would be good. But I guess I'm skeptical that it'll work.
No, I apologize. The algorithmic stablecoin part of the question is a really open one. So most stablecoins like Coinbase and Circle have one called USDC. When you buy $100,000 of that, they literally go buy $100,000 of treasuries, put them in a bank, audit it, and then it's like a little IOU that's way more efficient for moving money around. But it's always fully collateralized, fully transparent. There are a few, like Tether, that Carolyn mentioned, that are not very transparent, so they might be sketchy. And then these algorithmic ones, no one's proven yet that they can work. We just had one failure, so it's not obvious. And I would just say that that's such a specialized little niche and potentially never going to work kind of part of it, that it shouldn't, cloud your view of collateralized stablecoins, which are going to be very similar to or identical to the Federal Reserve's Fed coin that they're building. And then, unbacked coins like Bitcoin have a lot of use cases. And so they are really, really different than the thing that just blew up. But it makes great headlines to talk about it. So blockchain's 13 years old, and regulators around the world are trying to grapple with it. I'd say I had a lot of patience for a long time, but it kind of feels like the regulatory framework's coming too slowly. What's your perspective on the speed, and what are the next couple steps?
Yeah, so my perspective of speed is it's like watching paint dry. And you know, I'm talking about my world. So I say that with all the respect in the world for regulators. I would start back to just a frame of mind about this whole space to begin with. When I became Senior Deputy Governor of the Bank of Canada in 2014, we started blockchain experiments with the private sector. Because I thought, I don't know where this is ending up, but it's ending up somewhere, and if we don't get on the ground floor, we won't understand it, and we won't have relationships with people who do understand it. And so we started then. At that time, the Bank of Canada was one of the only central banks doing that. And some of my colleagues thought that we were a bit nuts because it was a fad. And so that idea that this is a fad, it's going to go away, kind of, because if we wanted a regulatory regime today, we would have had to start back then. It takes a long time to build something from scratch. And so part of it was just a disbelief. I think today it's really a question of there's a lot of motivation to regulate, but it's a really hard space to regulate because it's not clear which part of regulation that currently exists fits. So if you just take an NFT, for example, is it a security? Is it just a piece of art? If it's fractionalized, is it a derivative? You know, I mean, what is it? And is it a commodity? And so, and practically speaking, the answer to that question, it tells you who's going to regulate it in the US. And coming to ground on that across multiple regulators who may see things differently and may be slightly competitive with each other means that it takes a lot of time. And I think the third reason is that when you do banking regulation, which is what I know better than securities regulation, you actually need people who understand it. So when we started to think about derivatives, we needed to have staff that understood that. Well, there's very few staff at the SEC or CFTC, or I can talk about internationally, it's the same thing. We're all trying to hire the same people who understand it so they can regulate it sensibly. And so all that to say is there's a huge amount of motivation right now to do it. I can tell you that the UK government's writing legislation as we speak on stable coins. The Bank of England, the committee I'm on, is feeding into that. But to get it actually out the door and implemented and enforced is going to take time.
And how do central bank sponsored digital currencies compete or complement private sector stablecoins?
Well, I really think they can. There's a lot of worry that a central bank digital currency could make something like U.S. dollar coin obsolete, or I don't think that's the case, because how much it competes either with bank deposits. You can hold your central bank digital currency, or you can have a bank deposit, or you can hold a central bank digital currency, or use a private digital currency. Really depends on whether you've got a rate of interest, return on it that's high. So if the central bank digital currency doesn't pay interest, well, that gives you less competitive power over deposits or other type of crypto assets. If it provides just a basic service, so we know from surveys that people care about how convenient it is. So if it just provides a basic service, then it's a huge opportunity for stable coins and banks through their deposit services to provide value-added services on top of it. And so you could see Christian Catalini wrote a paper about how stable coins could be based on central bank digital currency. And so just an example of the kind of service that could be built on, you could have smart money. So you could embed contracts into that crypto asset in a way that the central bank probably, if you look at the over 50 central banks that are planning to do it, they don't intend to do anything except for the basic service and distribute it in a way that allows the private sector to build on top of it.
Great, and final follow-up on central bank digital currencies. There's one central bank that is 5 to 10 years ahead of everybody else. China has already launched a blockchain that has more people using it today than all other blockchains combined. And what does that do to the world's financial system, sanctions regimes, geopolitical balance?
So part of that's just numbers of how many people are there, because it's still in the pilot phase, but you're right. It's using a hybrid model. It's not totally based on blockchain. It's centralized. The core of it's actually centralized. And just to say that I would expect most central banks, if they did use blockchain, wouldn't use a permissionless one. They'd use a permissioned blockchain, which is kind of different economics. But so on the China central bank digital currency, there's some reason to be envious of the fact that, when I was working on the Financial Stability Board, I was chairing a committee on fintech, and not just on central bank digital currency, but on everything else. They were really ahead. And so it was at that time, before the tensions rose, kind of a pleasure to be able to work with them. But when you look at it now, I think that it's putting the onus on other central banks to try to catch up. Partly because they can see that maybe it'll work. Partly because they're all looking at a project that's being run by the Bank of International Settlements, which is a central bank of central banks, trying to put together a cross-border payment system with central bank digital currencies that, at the wholesale level, not retail, that interoperate. And you could just see the efficiency gains that come from that would be enormous, and China's participating in it with some other. The U.S. isn't on that team, I don't think yet, but there are some geopolitical issues with that project. But still, it just shows how important it will be to be able to be as efficient as them in the financial system. Is it going to disrupt the U.S. dollar? Sanctions, Russian sanctions, kind of illustrated how payments are being diverted through new infrastructure away from the core system. So the core messaging system, SWIFT. I would say you never want to be complacent, but I would say that you need more than a central bank digital currency to disrupt the US dollar in payments and as a reserve currency, and that's because you need complete financial markets to be able to hedge. You need predictable and hopefully non-existent but light capital controls. And you need a system where the geopolitics are, with respect to regulatory uncertainty and legal uncertainty, are as low as possible, none of which China have right now or are likely to have, given where you see Xi wants to take their economy.
Great, thanks.
So I think I could ask, we could talk. We could go have a coffee afterwards.
Hi, this is Dr. Yon Althusar. Thank you so much for this presentation. I don't know if this question will make sense, but I'll give it a shot. So what I'm hearing from Carolyn is that crypto is one potential bedrock for finance, and what I'm hearing from Dan is that low middle income country financial infrastructure, again, this is one potential solution for huge global problems. And on the other hand, I'm in New York, so I read about what happens on Wall Street, and I look at Paul Singer and Elliott Capital and what they're doing with Argentina, and the fact that there's no good civil discourse at a legal level for these structures that currently exist. Or I look at the NIH and their immunity to class action lawsuits and freedom of information requests about the emails Dr. Fauci sent to Wuhan. And once again, I'm if we can't solve these discourse issues at a socio-technical legal level in current financial institutions, and I can get an EIN number for $500 from Delaware and protect myself through a limited liability company and say essentially do what Paul Singer's doing with Argentina instead. And then given the events of the past week in the crypto space, I'm just at a loss for how do we do this kind of discourse engineering in a safe, ethical way when we're bunch of white people talking about low middle income countries' finance systems. That scares me. Like, how do we regulate the protocols that are open source, the intellectual property is owned by a tiny group of individuals, but liability is distributed? That's, I don't know.
You asked me more questions than I thought you would, so I'm going to start with you.
Oh, on this?
Yeah.
There was a lot in there. I would say that, and it's fun. Blockchain brings out all this. It's not. Satoshi gifted blockchain to the world for free. Bitcoin's open source software. It's the opposite of all those other systems you're talking about, which are centralized and taking money off everybody. And so anyone on the planet with a smartphone can use Bitcoin, and they don't need permission. They can send money to their friends. And I was on the board of a company in Africa, and I thought, oh yeah, it's going to be really helping the unbanked. Our biggest customer is Procter & Gamble. Like, they can't move money around Africa because it's so controlled. There's only 2 companies on earth that can move money in Africa, Standard Chartered and Citibank. That's expensive when you got a duopoly that controls. And with Bitcoin, Procter & Gamble can move money from Kenya to Tanzania. And obviously it'll have huge impacts. Procter & Gamble has a lot of power, obviously. A small citizen doesn't. It'll give a huge amount of power to the citizens. So I think the free nature of it, there's no intellectual property to it. It's all open source gifted to the world. It's amazing.
I think the promise is there, the aspiration is there. I guess I'd be just a little bit more hesitant about you're giving the power back, because again, I'm just relying on research that's being done, some by Princeton, researchers elsewhere that find evidence of market manipulation, games being played in mining, and then the governance structures that they're all treatable problems. That's why I don't think it's a fatal flaw. I think it's just something we need to acknowledge and fix. And those kind of go in the same line of, to do that, you need a discourse. And for the lawmakers and the regulators to be able to do it in the right way without stomping all over it, they need to develop relationships with the people people like you, who can sit down and go, okay, this is how it really works, and how do we put guardrails around it? Sometimes it takes big accidents to get that motivation there.
Hey, my name is Tiger. I'm just graduated last year. I have 2 quick devil's advocate questions. I'm pro-crypto, so I don't want to be canceled for asking this. First one is to Dan. So you gave the example of the dot-com bubble and Pets.com, but my counterpoint would be saying, for a fundamental business like Pets.com or Amazon, you can say that's how much revenue they're generating because these are the customers that are purchasing them and so on. But how would you value a crypto protocol, which most of the value or revenue being generated by a crypto protocol is from trading other crypto? So you kind of end up in a Ponzi scheme-ish kind of situation where it's only valuable because more people are doing crypto stuff. So that's quick. And then for Carolyn, quick question about regulation. A lot of people would force you to do deregulation, but I would say, why not do more regulation? Because if you look at something like Terra Luna and algorithmic stablecoin, I, as an average consumer, could say, all the warning signs are there. It's clearly a Ponzi scheme. Why didn't the regulators do something about it? And average consumers were hurt by it. So why don't you guys push for more aggressive regulations? Yeah. Sorry.
You want me to start? Okay, well, you're Tiger. Hi, nice to see you.
Good to see you.
You're preaching to the choir here. Like, it's just like it's something that I've given speeches on, and working with Bill Dudley, who is associated with the Griswold Center through the Bretton Woods Committee to raise awareness of the issues and excitement over the space, but issues about regulation and legislation that need to be addressed. We talk about the regulation to avoid accidents, and I think that's right. I mean, the Uber driver this morning, who's invested in Bitcoin, said to me, how could it be that it went from 60 to, and how could the regulators let that happen to me? And of course, it was a longer conversation than what I'm reporting, but but the bottom line is that regulators, the trust in regulators will be eroded by this, which is a pity because it's not that high to begin with. And so that being said, I think that the real gain to regulation that we're not talking about enough is that when you are a business trying to grow in this area and you don't have regulatory certainty, it's really hard to get investors to be happy with your business plan. And I know there's a lot of investment in there, a lot of smart people, but I'm part of the Creative Destruction Lab at the Rotman School of Management and on the blockchain stream looking at startups. And they're, aside from the usual problems, their number one problem is I don't know what the regulator's going to do to me in 2 years or even in 6 months. And it kind of breaks my heart to see that uncertainty is there when it could have been resolved earlier. That being said, I'm really happy to see that some countries are doing a really good job at trying to catch up.
So on the gold one, that's a common question people have. There's no cash flows to gold either, right? But it has a 5,000-year track record of having the ability to save wealth in it, sometimes move money around with it. And while Bitcoin only has a 13-year track record, so it's not that impressive compared to 5,000 years, 10 years from now, 20 years from now, and that's basically where it's at. It's the more people that want to use it for whatever they're doing. And 200 million people use Bitcoin now, so it attains value just because more people want to use it for whatever they're doing. Some people speculate and some people buy dumb things, yeah. But most of the people are using it for savings or transferring wealth. And for example, 10% of all US to Mexico remittance goes over Bitcoin. So there's 2 million Mexicans saving a month's wages. That's great, right? And then the blow up of Terra Luna, like where was GameStop's regulator, right? Or or why did WeWork go to zero? Like, shouldn't the government have protected the people from buying WeWork or whatever? So, sometimes investments don't work.
Hi, my name is David, class of 2020. I want to ask about Bitcoin and other cryptocurrencies as an investment vehicle. So I really like Carolyn's slide about the correlation to SPY and the decline of correlation to gold. I was curious, do you guys think that the correlation to SPY will continue? If not, what do you think will be the catalyst for it to uncouple with maybe those risk assets? And if you think it will continue to correlate, how do you think about managing that risk, hedging that risk? And why should investors hold Bitcoin or Ethereum when they could just hold SPY or UBO? Thank you.
Well, Bitcoin's been around for 13 years, and there have been 6 big S&P downdrafts during that time. And its correlation has spiked up in the past only for 71 days. It's been doing it for 4 months now, so admittedly it's doing it longer than it has in the past. I think those are just temporary. And I think in a world where inflation is rising and interest rates are rising, that has to make bonds go down mathematically, that's a certainty. But I think it makes stocks go down, and I think the Fed has to keep raising rates until the bubble in housing they created gets stopped. So I think other asset classes will suffer, over the next couple of years, whereas blockchain doesn't have to. It's not really connected to interest rates, and so I can see a world that they do decouple, and blockchain does well even when other asset classes struggle. It hasn't happened in the last 4 months, so who knows?
So I have to come in because I guess if you said Bitcoin and blockchain, and for me, blockchain is a larger group of potential than Bitcoin's a very specific asset within that whole universe. And I could see it recovering and I could see it sticking around for a bit. I just find it really hard to see the long-term proposition of it. And the reason is I guess there's a couple. One is that it doesn't really provide any underlying service in the same way that Ether does. And so that could change, but it feels like the Bitcoin community isn't settled on what they want it to be when it grows up. So that might be hard. That's why they the hard forks. And then on top of that, it relies on a business model of a fixed supply, which is supposed to be the thing that makes it a great monetary policy tool, which is in fact the opposite because it builds in inflation, and a consensus mechanism, which is extremely expensive from an environmental point of view. And so I just see that they're going to get their lunch eaten at some point by some other coins that are just better. And that's a normal thing. It's like that's just part of the innovative process. Of course, I don't know, so don't make investment advice, taking this as investment advice. It's just, I kind of look at these things as an economist and I say, what's the fundamental proposition? And to Tiger's point, you know, if people are buying it because people think people will buy it in the future until they don't.
Hi, my name is John. I thought I was too old for digital currency, but thanks to you two, I have some idea what's going on. My question is a much more fundamental one. Mining is digital currency, all these transactions, it's going to take a lot of electricity, a lot of energy. I read somewhere that mining Bitcoin alone consumed more power than, I think it was Denmark, if not all of Scandinavia put together. Do you have a comment about what kind of perturbation this does in the system, who's going to pay for this extra energy, particularly that electricity seems to be coming in the future. Our needs are growing every day. People are pushing the electric car. We have smart appliances. What are we going to do?
Oh, well, you know, those are great points, and it's a great segue from what I was saying before. Well, I think that the industry is trying to pivot. You would know more about this than me, but the proof of stake consensus mechanism is way more efficient. May have some government stability issues or security issues, but it's another mechanism that is more and more being adopted among others that have a lower footprint. I think this idea that you're going to use renewables and Bitcoin maybe doesn't have as much legs as the different consensus mechanisms that are less costly. And so I think that's where it's going. Ether is going, Ethereum's going there this year, aren't they? They're transitioning from, to proof of stake. So I think it's coming.
Yeah, I would say that ESG is the little bighorn of Bitcoin skeptics. It's kind of the last route of people that want to be negative on Bitcoin. So Bitcoin does use 1/10 of 1% of all the world's electricity or energy, which is a lot, admittedly, or an interesting number. But everything we do uses energy, and there are choices on what is a good use of energy and what is bad. And it's providing, you ask the Mexican migrant whether Bitcoin's good or bad, they're super bueno on that, right? They didn't have to work for an entire month to pay, to send their money back to their family. So everything's relative. Everything costs. There's costs. ESG has 3 letters too: social and governance. Bitcoin's amazing on a social and governance perspective. Anyone on Earth can use it. Anyone can participate. It's amazing. And then if you think about it, there's a lot of people that want to kind of be super negative about Bitcoin for ESG perspectives. There's no free lunch in ESG, right? The biggest companies on Earth, Apple makes all their products in China, which is literally the worst ESG country on Earth. They make them all out of aluminum. Aluminum takes 3% of the world's electricity. So there's a lot of negatives. And the ultimate one is gold, old school gold, like real gold, is a trifecta of ESG horribleness, right? It's strip mined with cyanide heap leaching in the world's worst countries, right? So, Bitcoin does consume 1/10 of 1% of all the world's energy, but it's providing a benefit to 200 million people. And then, as Carolyn said, all the other blockchains don't use energy, so they're just unambiguously wonderful for ESG. So, I agree. I think the other ones will outperform Bitcoin over time, but I'm still not willing to say that Bitcoin's a net negative for the world. It's still great.
There's a gentleman here that's been trying.
I'll get there.
Oh, you'll get there? Okay.
One of the value propositions of cryptocurrency that keeps being reiterated is their global nature. But then we operate in this landscape of regulatory agencies that are more or less national, with some exceptions. How well equipped are those national level regulatory agencies to regulate global payment system and so on, first of all? And then what's the trade-off between national sovereignty and global payment system? And Dan keeps mentioning the Mexican immigrant and the people from countries without stable currencies that can now invest in more stable cryptocurrencies, but that takes away from the power of the government, which governments don't really tend to like. And it also poses risks to everyone in those countries who does not invest in cryptocurrencies and might end up with like fiat currency issued by the government now worth nothing.
I'll start. Okay, so you're right. The major crypto assets are largely global, like Bitcoin. Interestingly, many of them are also local because they serve a local purpose, a local business model, and an incentive structure to kind of support that. But the international regulatory or standard-setting bodies that mostly come out of Basel are very well aware that you need at least compatible regulations across countries, even though the regulation will be domestic. And that's what they're aiming for. That's what they aim for in banking with the Basel committees, Basel III and others. Can we get there? I think it's going to be tough because when you look at the different approaches from the different jurisdictions, so Europe, for example, is setting up a separate regulatory regime. The US is trying to work within its existing regulatory regime. There's going to be opportunities for regulatory arbitrage, and there's going to be extra costs. So I guess that's an issue. On the sovereignty question, it really depends on adoption. So if it's widely adopted and it's not denominated in fiat, then the biggest sovereignty question would be sovereignty over your own monetary policy. And so if it's a stable coin, many of them are pegged to the US dollar, it can create inefficiencies in monetary policy, but it won't take away the sovereignty. So I think it really depends on how it grows. But you're right. The minute that Facebook came out with their first project, which was Libra, was the exact minute that G7 treasurers and central bank governors woke up and went, "Uh-oh, we better move."
Yeah, I'd say on the sovereign thing is, let's just face it, most countries have terrible monetary policy, right? And a few, like the United States, used to have decent, but we still lost 2% of our value every year. Now we're losing 10% of the value of our currency every year. So nobody asked me to vote on whether the Fed should buy $9 trillion of mortgages. And so I do think the future is better where the people get to vote on what monetary system they want to use. And states don't have to be the only sponsors of monetary systems, right? Bitcoin or another cryptocurrency could be. And the first question from Elon was about Argentina. They've devalued 13 times in the last 200 years, right? If I were Argentine, I'd have 100% of my net worth in Bitcoin, right? Because for whatever sends, ESG or whatever, it's way better than the Argentine currency.
Thank you. I'm Josh, and I'm wondering if you could explain very simply to everybody the risk to conventional banks of central banks setting up digital currencies. I've read about it, but I've never received a clear explanation. And perhaps if you do this, you can offer examples. One, somebody who is unbanked, like 5 to 7% of the U.S. population has no bank account. A middle-income family that's just managing and basically uses his banks as cards to cover shortfalls and so on. And then maybe a high wealth individual who uses regular banks for some services. Thank you very much.
So the issue, so if you think about a central bank digital currency being a digital version of cash, it would be, instead of having your wallet full of banknotes, you would have a deposit that's the same as the cash, but on your phone or on a card, like a store card, and you would use it like cash, except for you could use it online. The worry that banks have is that looks a lot like a bank deposit and you're using a debit card. In fact, they would say, what's the difference? One is you've got a liability of a private bank, and the other one's you've got a liability of the central bank. That's the big difference. And you don't need to have a bank account to have that central bank card, just like you don't need a bank account to have cash. So that could serve the unbanked and actually better in a world that's turning digital. The worry about central banks kind of stealing bank deposits is a real one, because that's a really cheap source of funding for financial institutions. And if their source of funding becomes more costly, you're going to pay for it in higher if you're borrowing money. That's for sure. And so When you think about it though, and there's lots of good work that's been done to kind of quantitatively measure it or model it through kind of economic models, and what it shows is that that concern is not huge if the central bank digital currency is designed properly. For example, that it doesn't accrue interest. So because deposits do. It also kind of shows that in a market where some banks, especially in Canada, have some market power, it actually wakes them up and says, oh my goodness, we better pay more in deposits. I don't know when you noticed when Fed funds rate rose, did your deposit rate rise as much? No, that's right. But your loan rate did. So there's a certain discipline that could be helpful for banks to provide better services. That being said, that there is a worry that if people were worried about the banking system, they could run to central bank digital currency, and so that's the tricky part that needs to be determined. How do you keep that from happening in times of uncertainty? To stabilize the system, there's lots of ways to do it, like limits or sending that funding back to financial institutions through market operations. But a serious question. I just don't believe that banks are pretty innovative, or they should be, when they have somebody at their heels. And so I think a little contestability, even if it comes from central banks, is probably overall a good thing, and they can seize the marketing, the opportunities to build services layered on top of it, and do just fine.
I have a question. My name is Alexander, and so I heard someone in my class did a presentation about Bitcoin, and they said that you could buy like most everything that you wanted with Bitcoin. I was just wondering if you could buy like anything in the world with Bitcoin, or no?
So Josh, the stat that 5 to 7% of Americans are unbanked is incorrect. 20% underbanked, because minors and children can't get a bank account, but they can buy things with Bitcoin. And that's why Microsoft takes Bitcoin since like 2013, because their customers are little Xbox users. So, so no, it's not very convenient yet to buy stuff, because some merchants do accept it now, but most don't yet. And it's partly because a while ago, not that many people had it. Now 200 million people have it, so more merchants are starting to take it. But in 5-10 years, you'll be able to scan your QR code and choose, do you want to pay with Apple Pay or Bitcoin or Ethereum or Ripple or whatever. So it's coming. It's just not enough people are using it to make a merchant care. But it definitely will be part of it. Thanks, though.
Hi, Randy Sullivan, class of 87. I want to, people have been piling on Dan a little bit, so I want to ask Carolyn a question. It doesn't seem to be a coincidence that the rise of Bitcoin kind of happened post-financial crash. You look at, I live in the Midwest, and there was something like, I think Bloomberg reported $26 trillion worth of bailouts to, New York banks. And the bondholders were not, forced to a reckoning. And you look at the Federal Reserve picking winners and losers. How far away has the Federal Reserve got from its mandate, from 1913 to promote stability, to promote financial stability? It seems like it's getting more and more and more unstable, and in a way, like sort of metaphorically, Bitcoin is a criticism of central banking and the sort of backroom sort of dealing, sketchy sort of picking winners and losers that goes on, getting into any details on that. How is Bitcoin helping you guys reform what you do? Because it really is confidence, isn't it? Somehow bringing confidence to the system.
Yeah. I think what you're saying is that Bitcoin is as much of a social movement and a political movement, small p political movement, as it is a technological movement. And I think that's absolutely right. And you can see it even more, like post-financial crisis, there was timing. I don't know how well that was timed with with the actual crisis that was happening right during it. But I think that the lesson, not just for central banks, but for governments and big financial institutions, is that the sort of lack of transparency about how we do things. The mistakes are a problem, but the lack of transparency about how we try to fix the mistakes and the lack of understanding about what the value is relative to doing nothing or doing it another way is a big problem. And if there were an agenda that I could run to make that better, I certainly would, because I think that's a real problem. It's not going to go away whether we have Bitcoin or not. I think it's more anchored. In the sanctions, actually, that just went on Russia, on the financial side, just added further support for that group that says, hey, we want to live our lives without these nation states who are, taking decisions that affect us every day without asking. And then you pile on top of that the monetary policy error that's been made, and central banks have admitted it. So I'm not saying something they haven't already said. Only adds to that. On the Fed's mandate, I have to be careful here, but I'm speaking for myself and not the Bank of England, so don't attribute anything I say to them. I've always felt that the dual mandate was a tricky thing, because it meant that they really couldn't pick inflation, especially in the situation that we were in, and that at one point it would kind of lead to an issue. And so, the Bank of Canada has a single mandate on just inflation. Same mistake was made, but inflation is a bit lower for a number of reasons there. I think the real issue, though, with inflation these days, and the mistake that was made, has not got to do solely with the mandates. I think it has to do with the fact that the economists aren't very good at understanding how the economy really works when it works in a different way than we're used to. And the supply chain disruptions, I know you showed, the price of oil and the price of some things that are affected by, obviously monetary mass has gone up, so that's creating inflation. But there's also, it's in the face of huge supply shocks and disruptions in supply chains that monetary policy can do nothing about. I think that central banks whether were surprised by that, they didn't talk to enough people, or we don't have the right models to actually see that in real time, and that's a mistake that's going to cost central banks for a while in terms of trust. But I'm very convinced that they're going to get inflation back to their mandates, mandated values, and the big risk is just how much economic pain is going to be needed to do that.
Carolyn, first for you. The question about Ripple and XR, would you be willing to comment on whether that's going to become security or not?
I think, what do you think? I don't think I should comment on that.
Okay.
Not that I have any inside information, but I probably should.
I'm happy to. So it's an interesting one. I was at a conference with the CEO of Ripple. We've been investors there since 2013. And the panelist asked him a question I didn't even know was true. He said that 19 out of the top 20 protocols are now based outside the United States. And he's number 20, and he's in a lawsuit with the SEC. He's probably going to move to Singapore. So as an American citizen, I think it's terrible that the government is scaring productive companies out of our country and to elsewhere. And it's the opposite of the internet, right? The US government literally built ARPANET and then gave sales tax subsidies to Amazon to help them grow, and gave all kinds of indemnifications to make the internet happen in the United States. And I think as a citizen, we've gotten a lot of benefit of having all the major internet companies here. And I think it'd be unfortunate if the SEC and others scared, blockchain to other countries. But the punchline is, I don't know. It's a federal court case, and in about 6 months, a judge is going to tell us.
We'll find out. Because I just had lunch with a colleague a month ago, and all he could talk about was crypto, and he converted me. So I'm a newbie, as I understand. And so assessing it, the one thing that really rang true to me. He says, this is essentially software of the future. And so if you were, as just an investor, which would be very tiny at the moment, I'm assuming you give advice, but I was thinking the most important thing would be, look, what is the technology behind this new company that shows up or whatever? Would you agree with that, or would you have another point of view too?
Oh, I guess I would say I think it is going to change the world, and so it's a great investment to be invested in cryptocurrencies, blockchain, companies, venture, the whole enchilada, but just try and buy a very diverse portfolio of all that because there's a lot of uncertainty.